This works. What's up? What's up? Let me make this public. All right, yo, what's up for you guys watching this on the YouTube replay? I appreciate y'all being here. We're going to be looking at a bunch of stocks live, and we're also going to be reviewing AMD earnings. AMD reports earnings in a couple hours, and same with some other names, actually. Let me go check that. Powell Industries, actually, this company as well, one of my largest holdings. Actually, I'm up the most on this stock right here. They report earnings today as well, and we get AMD, so we're going to be doing some analysis on AMD as well. This morning, we had Constellation Energy report earnings. Initially, this company was down 7% to 230. Now they're at 275. They had quite the impressive recovery. Yo, what up? What up, Two Trick? How's it going, man? Yeah, we're going to be looking at a lot of stocks live. If you got any stocks you guys want me to look at, let me know. I'm going to do a quick review on AMD because they report earnings in a couple hours, 3 hours, and I do own that one as well. Oh, yeah, here's my Weeble portfolio as well. I just like being completely transparent. I go into all the other, live streams and no one else shows their portfolio. Look, we're actually down 10% all time. Yo, no way, Catherine. What's up from Greece? Very cool. How's it going? Hopefully you're having a good day, enjoying the trip there. This is AMD, or maybe you live in Greece. I don't know. Uh, but here's AMD stock right here. They report earnings in a couple hours, and here's what I really like about this company right here. First off, they have this nice GPU market share. You get a 16% market share exposure to PC GPUs. You also get this huge data center business here. Like the data center revenue on AMD is up 69%. So my hope is that AMD is going to beat on their data center business. That should drive revenue because it's been growing insane for them. It's literally at a new record. Same with their client revenue. The client business is up 58% year over year, which is pretty impressive. Also, if we go to the free cash flow was a billion. The sales were up 25, and they had a one-time adjustment to their net income. They actually had a record net income quarter, and balance sheet is incredible. No net debt. I think they have like 2 billion of net cash. Yeah, Palantir is getting hit today. You're right. Yo, let me go to my watch list or of all the stocks here. So yeah, a few stocks are up today. Actually, let me go right here. So yeah, look, Palantir is down 13. Digital Ocean, Turtle Beach. Has anyone heard of Turtle Beach headphones? Yo, this ain't good. They're only worth 190 million. They're at an all-time low. But yeah, Palantir just reported earnings. You know what? Let's go look at Palantir earnings as well because let's see if they're at a buy the dip opportunity. I know that valuation is still really high for this company. Let's see, they're trading at 460 times net income, which we know is a little bit ridiculous. So yeah, the orange line is what the analysts were expecting there. Palantir beat on revenue, they beat on net income, and they beat on EBITDA. So they had a triple beat on Palantir's numbers. I love this company for their balance sheet. Let's see how much cash they have now. 5.43 billion of cash with zero debt at all. Palantir is a debt-free company. And, the government makes up most of their business. Look at this right here. Government is 55% of the revenue, and this is incredible growth. This is why people like Palantir. They're growing their numbers at a phenomenal rate. The numbers are up 41% year over year. Very impressive. So, yeah, that's what I like about Palantir. Let's see. In our portfolio, every stock in this portfolio is down today, except for Amazon. Amazon's barely green, 0.03% green. Ooh, here we go. He said, do you have Celsius numbers? They reported earnings today. Let's see if I do. So they're up 1.7%. I don't think they did report earnings today, but I'll double check those. So here's the 2025 Q1 earnings. You know what? Let me go down here. So yeah, they did report earnings. You're right, actually. So they missed on revenue, they missed on net income, and they missed on EBITDA. So they had a triple miss, but looks like the stock is up today, probably because they've just been so heavily suppressed. I mean, they fell from like $90. Unfortunately, Celsius lost their growth a while back. Like if you go to the revenue, doesn't include the most recent quarter, but revenue's down 5, and the net income actually went negative in the most recent quarter. So that's kind of why Celsius fell so much. But they just acquired Alani, and I'm curious to see how that acquisition will help out their growth. We want to see the growth come back there. Yeah, Palantir's price to sales is like over 100 as well. You know, which is crazy. Thoughts on Rolls Royce? Bought it back in 2022. Yo, I think that's RYCEY. Yeah, so Rolls Royce, dude, did y'all know they were a publicly traded stock? If you bought them in 2022, you must be up a good chunk of money on Rolls Royce. Congrats. Most people know them for the cars, but they're actually an aerospace company. They make plane engines. Yo, Northern Jays, dude, what's up, man? Thanks for the 4 roses, dude. How's it going? So yeah, they're in aerospace, defense, power systems. So yeah, and they're super profitable. Look at that. Full year 2024, they made 3 billion of net income. So very nice. Uh, yeah, a lot of the aerospace and defense stocks have been doing really good. Yeah, no problem. Two trick. Hopefully I'm saying your name right there. Appreciate you. Um, Let's see. Oh, OKTA. What up, Northern Jays? Thanks again for the roses. I got you. Let's check out Okta. So I believe this is like a subscription software company. Let me actually check that out right here. So here's the revenue. Here is the super impressive part. I mean, This is really impressive, like their annual revenue growth right here. Let me actually check that out down here. So yeah, the revenue is up to 600 million. What about net income? So yeah, look at that. They used to lose net income every quarter, but now they're actually making net income every quarter. So that's a great sign. Look at free cash flow. Free cash flow is up 71% year over year. So these numbers are looking very good. Um, yeah, I can see why they're at like a new 52-week high today. They're probably down from 2021 because they were really overvalued at the time and they weren't making net income. Because look at that, they didn't start making net income till the three most recent quarters, the most recent years. So yeah, actually, the fundamentals look really good on that one. Uh, SMCI earnings today, short super microcomputer. Hey, I actually own them. So let's actually check that out right here. Again, don't listen to me. I'm not an expert. I don't sell anything, by the way. I don't have a course book, Discord, WhatsApp, Telegram. So yeah, I do own some super micro shares. I thought super micro, um, I don't think they report earnings. Maybe they do report earnings. I don't know. I guess we'll check it out. The thing is, the company lost their margins. Like, look at this. The revenue growth is great, 54% revenue growth. But if you look at the net income's only up 8%. So what does that mean? Look at this margin compression. I mean, unfortunately, the margins are down 30% year over year, but the sales growth is there. They just sell a commodity. They're trading at 15 times net income, very cheap valuation. I guess we'll see how they turn out. Yeah, we get AMD earnings today as well, and Powell Industries, one of my bigger gainers, are in here. Ticker symbol POWL reports earnings today, and I'm gonna hope again for another nice little. There's so many head and shoulders on this chart. I bought this company. I bought it at an all-time high a while back, but then it just keeps on hitting new all-time highs. What's up, brother? How's it going, Jim? Doing good. How about you? Let's see. Yeah, if you want to get this app, Wizzy, it's in the link tree in my bio. It's the first link there. I love this app for all the like analysis you can do. Like you could, yeah, let's go check out like Warren Buffett's portfolio. Warren Buffett just stepped down as the CEO of Berkshire Hathaway. He owns a lot of the higher yielding names like Coca-Cola, Chevron. Oil stocks have been hurt. Look at Chevron, for example, the past week here. Chevron has fallen like a monster 25%. This is a nice high yielding dividend oil stock if you're looking for a higher yielding play. They have a 4.9% dividend, and you get exposure to oil and gas. So, yeah. In your opinion, why is the market down today? So yeah, if you look in the middle there, S&P's down 0.4. Yeah, I don't know. We probably just came off a really bullish week. Like if we go to my portfolio the past month, and the S&P kind of looks similar, I'm up 18% the past month. So again, year to date, I think we're still down. Let me check. Yeah, look. We're almost positive. This was crazy, guys. Literally on April 4th, like early April. This is why you never panic sell. I was down 15% year to date, but now we're only down 0.1. So I guess buying it, I can't believe this recovery. Like I literally don't believe it. Kind of the reason for today's rally in my portfolio is Constellation Energy. They're up 10% today. They reported earnings this morning. But yeah, here's kind of my watch list down here. Q's down 0.7. Yeah, look at that. Looks like market's a bit volatile today. So anyway, let's go back to the stock analysis right here. What is Powell Industries? They're an electrical infrastructure play. They make switch gears, and they have no debt. This is a debt-free company, and they have incredible growth. Sales are up 24, net income's up 44. So that means they're growing their net margins, which is very impressive. 15% net margins, no debt. I think 20% of their market cap is just their cash. So I've made a lot of YouTube videos about them. Oh yeah, if y'all want to go subscribe to my YouTube channel. It's called Nathan Robert. I've made multiple videos about Powell Industries. My YouTube channel is called Nathan Robert, link tree in bio. I don't sell anything else. I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. I'm just on here giving my opinion. And the only thing I do have is a YouTube channel. So if you want to help me out, go subscribe to my YouTube channel. But anyway, here's ticker symbol ANET. Yeah, what up, Robert? Or Robert? Let's check out Arista Networks. So they're on my watch list. I really like this company. They just sell products and services. So look at the product revenue growth. This is what I like to look for. The fundamentals are growing of the company. Product revenue is up 22, but look at the service business. This is the real winner. It's up 40% year over year. Incredible growth to a new record. The free cash flow is ridiculous. Basically $1 billion of free cash flow a quarter. The net income's up 30% to 800 million. I mean, super impressive. They're growing their margins. So that's a great pure growth company in my opinion. So let's see. Do you recommend buying GTA 6 stocks? So yeah, GTA 6 is ticker symbol TTWO. The reason the stock fell yesterday, or actually they've had a nice recovery, but they delayed the release of GTA 6 to like the back half of 2025. But anyway, look at this stock. They're pretty close to an all-time high. I probably wouldn't buy this one right now. The risk reward doesn't look too great. There could be another 10-20% though. I don't know. But whenever they release GTA 6 is going to be a huge revenue driver. Because right now the fundamentals aren't too good, but whenever they release that, yeah. Is this the yeah? Hey, this is a Basher. This is the Moo brokerage. Yep. If you want to get this brokerage, it's in the link tree in bio. First link there. So I love all the analysis you can do on here. So someone said, Jonas said thoughts on Walmart. Yo, that's a great grocery store. Even in a recession, people still got to get groceries. People still go to Walmart. And that look at them, the stock has moved like Nvidia. The grocery stores have honestly been doing very nice. And if you go to the net income right here, they make like 5 billion a quarter. Yeah, look at that. Pretty much 5 billion of net income a quarter. We go to the dividends, you get a 0.8% dividend yield. They raise their dividend yearly. So I actually own kind of their competitor. I think they're both winners. I own here if I go to my Roth IRA right here, I own ticker symbol KR. This is Kroger. So they're also doing great. Actually, they haven't done as good as Walmart. Walmart's been doing a little better. Yeah. Yeah, this is my dividend only portfolio. Every stock in here pays a dividend, by the way. Like even Meta, Google, they're like dividend growth companies. But yeah. Thoughts on buying gold right now? Yo, gold is ticker symbol IAU. This is the digital version of gold. You would almost always want to buy this instead of physical gold. Again, not financial advice here, but I mean for the lower fees. But look at gold. It's had an incredible 3-day rally. Gold is literally at all-time highs. So if you got any gold chains, gold jewelry, or something, go hit up the pawn shop and sell it maybe because you'll get the highest price in history for it. Let's see. TSM, yo, dude, I love Taiwan Semi. So this company right here, I almost like them a little more than Nvidia because they have a really good yield. Check this out. You get a 1.4% dividend yield and you get exposure to chips. Look at their market share for the 5 nanometer wafer chips. They have a 67% market share and the market share is growing. And you won't believe the bottom line here. They make 10 billion of net income a quarter, or 10 billion in the most recent, 11 billion, 10 billion, and it's growing. So anyway, Taiwan Semis are great. Just buy and hold for the long run, I think. Uh, let's see here. Yeah, if you guys got any stocks you want me to look at, let me know. I worked at Walmart, lots of bid. Dang, man. Oh yeah, what up, Kavan? Yeah, I'm reading both the YouTube and the TikTok chat right now. So yeah, here's Hims and Hers. They reported earnings. They're up 8%. I remember, I think in the overnight market yesterday, they were like down, but now they're rallying right at the market open. Very nice if you have calls. So look at this. They beat a huge chunk on revenue. They beat on net income, and they beat by 50% on their EBITDA. They really was good earnings. I mean, look at that net income growth. It's really impressive. So the earnings really were good, and they're a debt-free company. Let's see. They now have 332 million of cash. So yeah, really strong fundamentals here. They just partnered with NVO, no, with Ozempic basically. Uh, yeah, hey Stickbug, if you want to get this app, it's in the link tree in my bio. First link there. Yo, Jello, what's up? Constellation Energy, you're absolutely right. No way, they're up 11% now. So yeah, Constellation Energy in the pre-market, we were getting pranked here. We were down 5% to 231. But now it's up 11%. I don't believe it. So yeah, they're actually now up 21% year to date. We're up 33% on them. It's actually the only reason our portfolio is green today. If we look, we're up 1.68% on the day just in this portfolio. Because if you go to the Qs are down, SPY is down. So yeah, I do. I'm very happy with Constellation Energy right now. They're gonna finally acquire Calpine. It's supposed to go through at the end of the year, which will instantly be accretive $2 to their yearly EPS. I mean, there's a lot of good news for Constellation Energy. They're a pure nuclear energy stock, by the way. If you're wondering, hey, what is Constellation Energy? This company owns 50% of all the U.S. nuclear energy reactors. So largest pure play for nuclear energy. And they have literally they're restarting the 3 Mile nuclear island uh nuclear energy reactor just to solely power a Microsoft data center. Yo, let's keep looking here. I just started been using Netflix. What do you think about Netflix? Yeah, dude, Netflix, they're kind of seen as tariff proof, but then there was some recent news that movies are going to have imported movies are going to have a tariff on them or something. I don't know. I don't know how that'll affect streaming, but look at Netflix. Unbelievable all-time high right here. I mean, stocks done incredible and they deserve it too. Look at their premium subscribers. It went from 282 million to 301. They have a 301 million premium subscribers. The net income growth is crazy. They literally make over 2 billion of net income every quarter easy, after tax profit. And same with free cash flow. Free cash flow is super impressive. So the valuation though is really high on Netflix. It's hard to buy them right now just because they're at an all-time high, but they deserve it. They have really great fundamentals. Infrastructure and energy, power building all the data centers should make some more money. Yeah, I agree with that, Calvin. IMAX got hit. Yo, has anyone heard of IMAX? It's like those big movie screens. Unfortunately, yeah, this stock hasn't done too good. They're the same price as they were back in the year 2000. But they reported earnings. Let's see. So they beat on revenue, missed on net income, beat on EBITDA slightly. So then this company isn't too terrible. Like they're making net income every quarter, which is the good news. But I don't really see the growth story of how this will like 3-4x like other stocks can. Fortunately, yeah, I'd be careful with IMAX. Um, let's see here. Mike said FOXO. Bought at 159 and sold at $2. Yo, nice. So yeah, this is a company you definitely want to trade. You do not want to own this one for the long run. If you look in the top right, this whole company is worth $6 million. So the whole company's worth $6 million, and they lost $6 million in the most recent quarter. So yeah, definitely don't buy that one. It's or as of like a buy and hold. I don't even think I'd swing trade that one. Can you show your dividend portfolio again? I want to see what you hold. Yeah, hey, if you want to see my entire stock portfolio, go to my YouTube channel. I do stock portfolio updates on there all the time. I just did one. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. By the way, I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. These are all dividend paying stocks. A lot of these are dividend growth companies like Google, Constellation Energy, Meta, United Health. United Health just keeps on bleeding. They just won't go up. Healthcare actually though is getting hurt today. If we go back to the healthcare stocks like I think Eli Lilly was down. Yeah, look at Eli Lilly. Eli Lilly's down 4. UNH kind of brings that with it. So, yeah, let's see what's green today. Yo, there's not much green. Yeah, Palantir's down 14. Let's see here. We Ride. Yo, the Nvidia Chinese stock is finally green. Um, yo, look at Limbach. This is like a shipping container company. I almost don't believe the stock price appreciation. What's so sad is I sold this company like I should never have sold it, but they're doing great. Anyway, uh yeah, nothing's really up today. Oh, Call Main, yo, this company actually I want to give a quick look at this stock right here. If you look in the middle, they have a 7% dividend yield. And if you look to the left of that, they're trading at 4 times net income. 7% yield, and they trade at 4 times net income. What does this company do? Oh, jeez. Oh, sorry. What? Hey, I'm about to end the stream here. I appreciate y'all. Hey, what does this company do? They sell chicken eggs. They literally have a 20% market share for chicken eggs. So in the most recent quarter, they made 500 million of net income. And if we go check out how much does that 7% dividend cost? Only 73 million. They have a super low dividend yield. So, or I mean, super low dividend payout ratio. So yeah, they just sell a commodity. They sell chicken eggs, but I'm buying them for the yield and the dividend they just paid. I just got 3.5. Look, they paid $3.50. The stock price in the top left is $95. So you just got 3.5% of your money back in a qualified dividend that for me is tax free. So I just got 3.5% of my money back tax free in a qualified dividend, which is pretty cool with Callman. Anyway, let's get back to the let's go look at some more stocks here. Hey, thanks, Stu Trick. Appreciate you. Um, let's see. NVO has earnings tomorrow. So yeah, we had HIMS today and NVO tomorrow. This is the company that owns Ozempic, if you've heard of that like weight loss prescription. So check this out. If we go to where most of the revenue comes from, look, 93% of it comes from their diabetes and obesity care products, which is why a lot of people like them. So they're like a pure weight loss play. Look at the bottom line here. This company has real incredible profits. They're making 3 to 4 billion of net income a quarter, and you get a 2% dividend yield. But then why is the stock falling so much? I think it's because their Ozempic patent expires in 2027, which is unfortunate. But the valuation is super low on them. AppLovin, dude, this company right here, you won't believe the incredible fundamentals. This company deserves to be where it's at today. They deserve to be higher, probably. The valuation is pretty ridiculous right now. But look, pure advertising stock, you won't believe the growth. This is why they deserve the hype. Their revenue is up 73%. This is the kind of company I want to own. And this is all high margin for them because look at the net income. They made 600 million of net income, up 250% from the previous year. Look at that. Just 1 year ago, they were sometimes losing net income every quarter. Now it says 600 million. If you go to the free cash flow, 700 million of free cash flow. So they're making real profits. So I'd like to buy them if the valuation gets somewhat reasonable, but it might not because it's such a high quality company. Here's someone said, Stonky said, please do Wolf. This is a company I would please never buy. Yo, I'm not trying to be a bear here, but I'll show you the numbers for yourself. And this is why I think that. Look in the top right, you see the market cap. This whole company is worth $611 million. So remember that the whole company is worth 600 million, and just in the most recent quarter, this company lost 372 million of net income. That's half their market cap. So if you ask me, this company, in my opinion, will slowly just keep on bleeding lower. Like this is how look, and the revenue's down. So revenue's down 14%, net income's negative 370 million. I mean, that's really sad. They lose over a billion a year. So yeah, I'd be super super careful with that one. Let's see. Good time to buy healthcare stocks or wait? If so, which one would you recommend? My one healthcare stock, which is really an insurance company, is United Health Group, UNH. I love this company. Low value. They're trading at 15 times their own 2025 EPS projections. So 15 times net income. They do buybacks, 2% dividend yield. Great insurance company, I think. Let's see. Yeah, Stonky. That's what I'd be careful with Wolf Speed. Super risky in my opinion. But let's see. What up, Drew? He said CSTL. Yeah, let's check this. I haven't heard of this company. I don't think so. This is Castle Biosciences. So let's see. This is another really small like company. One I'd be super careful with. They have a $470 million market cap. So super small company. Let's see. Did they make net income? It's a little choppy. They lost 25 million in the most recent quarter, but they have been making net income the quarter before. So this is good news. The sales are up 20%. But mm, oh, really good balance sheet by the way. Let's see. They have 275 million of cash and no debt. So actually, it's not too terrible. Actually, half their market cap is just their cash. Actually, they're not too terrible. The risk to reward, I'd have to see why they lost net income. They might keep losing net income. I don't know, but at a quick, not so smart glance, it doesn't look too terrible. I wouldn't put a lot of my money in that stock still. Like I own a lot of risky companies like that, by the way. Like I have Robinhood, SoFi, Reddit, Rumble, all these kind of risky companies. You don't want to have a huge chunk of your portfolio in them. You just want to have like healthy little healthy positions in them, or you could lose a lot of money like I have on like UiPath and Zoom. I'm down 500, 1,500 on them. So that's why, got to be careful with some individual companies. Stay diversified. Ooh, B-Mill said, what's up, dude? How's it going, B-Mills? He said, OPRA. Let's check it out. So has anyone heard of the Opera GX browser? Yeah, I keep on seeing like ads for it and stuff. So this is that stock publicly traded. They actually have no debt. They're only worth 1.5 billion and they are trading at 18 times net income. So they're actually trading at a very fair valuation, 18 times net income. And actually, let's see how they're doing. So let me check their EBIT right here. So they make like 100 million a year. So they're trading, yeah, really like 15 times net income probably. Yeah, here's their net income right here. It's actually not too bad. They're in search and advertising. And yeah, look at this. Why I said they're debt free. Look at this monster balance sheet. Let's see. Let's see. No, okay, 100 million of cash. So they're trading at 8% cash value. Not too bad. So yeah, I don't own them, but they're definitely an interesting niche stock. I've heard they'll do good if Google has to sell off Google Chrome. They could do good. Uh, what's that? Never allowed to sell on the. Yeah, I that's just what I named my portfolio. I tell myself once I buy a stock in here, I'm pretty much never gonna sell it. Like this stock right here, I said I wasn't gonna sell this one. I've a lot of these companies I've owned for many many years. Like DocuSign, dude. I was buying DocuSign way back here. Powell Industries. A lot of these stocks I've held for many, many years. Like Powell Industries, I bought way back then. So Powell Industries, by the way, reports earnings today. They're expected to move 15%, either up or down. So wish me luck with that company. Oh, here we go. I didn't see this one. FFAI is another trash stock, in my opinion. Oh, Oh yeah, Faraday Futures, yo. This is the ultimate example of a company do not buy. Example fundamentals. So if you look in the top right, the market cap, the whole company is worth 107 million. So you could buy this whole company for 107 million, and here's the asset you're buying. You're buying an asset, a company that loses $100 million just in the most recent quarter. They lose like 80 million of net income a quarter. So this is definitely a company you don't want to buy. Uh, they should just keep on going lower. Thoughts on selling calls on Amazon? Amazon should do good in the long run, so you don't want to permanently sell calls on this, but it could be a good like short-term trade thing. Collect a nice premium. You could probably collect like 5 to 10% a month if you sell calls on Amazon. Ooh, here we go. So SO1A said AMD stock. You're right. AMD reports earnings today. I'll do a quick analysis on them because I do own them. They're one of my bigger losers. If you look down here, we're down 20% on my AMD. I just like being completely transparent. But here's the good news. Here's what I love about them. I'll be quick about this. They have a huge GPU market share. They have a 16% GPU market share. They're a huge actually data center play. Check this out. If you look at the data center revenue, it's up 69% year over year, literally to a new record. This is the kind of company I want to own with incredible growing fundamentals. The client revenue is up 58, but if we go to the like embedded revenue, this is where it's seen some lost growth. It's down 12% year over year. Luckily, it's a smaller segment of business, but free cash flow was a record billion. Operating profit was a billion and no net debt. Really good balance sheet on AMD. So, oh, what up? Matt Kinsey said Upstart. Let's check it out. Is that UPST? So I believe this is like a, or Mackenzie, what's up? This is like a lending company, I believe. So let's actually check that out there. So they haven't done too good on the weekly, but let's go see why. So platform and referral fees. Let's see how that's doing. So yeah, that's probably why the revenue's way down from 2021 to 2022, but it's seen a little bit of recovery. Yeah, the servicing and other. So it's slowly been declining, but look at this right here. Here's kind of why the stock's been doing decent. According to the orange line there, that's what the analysts expect. They just beat on revenue. They're still losing money, but they lost less than expected, and they beat on every number here for their most recent earnings report. So they're beating on every metric, which is the good news. Uh, so hopefully they can keep that up. But let's look at some more stocks here. $100 million loss. Hey, AMD is always losing. Yeah, you're right, dude. AMD just keeps on slowly bleeding. I feel your pain. Let's see here. September said EGY. What's this one? I haven't heard of that stock. EGY. So Valico Energy. Okay, so this is probably an oil and gas stock. Unfortunately, they have not done too good, but neither has the price of oil. Let's see. How's their revenue? So yeah, revenue's down 18%. And then see, the net income was only 11 million. Yeah, so they're just not making that much money, to be honest with you. Do they pay a dividend? They have a 7.5% dividend yield. Wow. So, oh yeah, they're only a $300 million company. Nothing's really blowing me away there. They're just too small of a company for me to really like trust a lot of money with them. But actually, they're making net income every quarter. It looks like they had a 40% payout ratio. They can afford the dividends. So as long as they keep that up, then that's great. Ooh, yeah, thoughts on Uber? Yeah, Uber just bought a company for $700 million today. Maybe I can go to the news. Yeah, look at this. If you look at the very top there, Uber agrees to buy controlling stake in Turkish food delivery platform for 700 million. So Uber is such an innovative company. They just bought 14% of Grab Holdings, and here's why. You see how they just spent 700 million? Here's why they can easily afford that. They made 1.7 billion of free cash flow just in the most recent quarter. So they can easily afford to spend 700 million. They don't pay a dividend or anything. And in net income, they make like 700 million of net income a quarter. So very impressive. And, the fundamentals are still growing here. The mobility revenue is up 25%. Like Uber is still growing. The delivery revenue is up 20%. That's like Uber Eats. Look at their active users. They have 171 million monthly active users. Benny. Oh, yeah. Hey, Benny, if you want to get this platform, it's in the link tree in my bio. It's the first link there. Let's see. Tesla, please. Yeah, let's check out Tesla. Oh, Adrian, how's it going, dude? Let's check out SoFi as well. I got you. Good to see you. So here is Tesla right here. There's some good news and bad news about this one, James Hunt. And I think every Tesla investor kind of knows this, but look at their total vehicles delivered. It lost their growth. Like just if we go to the automotive segment of business here, this is really unfortunate. It is down 15% year over year. So Tesla unfortunately lost their growth. But if we go to the energy and storage business, this is up 66% year over year. It's seen some very nice growth to it's only 10%, 14% of the revenue. Now look at this. This is 14% of the business. If we go back to last quarter, it was only 11%. So their energy business is growing because their automotive is falling and it's still growing. But anyway, that it's a little tough to buy Tesla right now at this super high 150 times net income. Yeah, look at the net income fell 70%. So from a financials point of view, I don't want to buy Tesla, but if the robotaxi thing is right in the future, Tesla will do great. But yeah, yeah, I'll be careful with that one. Yo, so let's go look at SoFi Technologies. Yeah, what's up, Adrian? So I do own that one. Yeah, there's my AMD position. We're down 20% on them. I just like being completely transparent. I go to all the other streams. No one else shows their portfolio. By the way, I sell nothing. I don't have a course book, Discord, WhatsApp, Telegram. All I have is a YouTube channel. So if you want to help me out, I'm streaming on YouTube as well. My YouTube channel is called Nathan Roberts, and the link tree in my bio. It'd mean a lot if you subscribe. But anyway, here's SoFi Technologies. I have 24 shares of them. Not a huge position because they're really volatile, but Here's the incredible thing about SoFi. Here's why people love them. The revenue of their financial services, they're a fintech, they have their own banking charter. It's up 85% year over year. It's seen some phenomenal growth. Same with the lending business. Lending is up 18% year over year to a new record as well. And people can take them serious because they're making net income every quarter. Because if you scroll back to last year, no one could take SoFi serious. They're burning net income every quarter. But now they're making net income every quarter. So SoFi's really turned things around. Good news for them. Ooh, what up? My name is. How's it going, man? Yeah, I'm reading both the YouTube and the TikTok chat. So he said Nvidia stock. Yeah, we'll look at Nvidia and his AMD a buy. Yeah, what up, Powell? We'll check that one out too. So here's it. AMD and Nvidia are very similar. AMD reports earnings today. So if you buy AMD now, you're kind of betting into earnings. But here's Nvidia stock. Here's what's so great about them. I haven't looked at them today. Look at their PC GPU market share. You get an 18% exposure or GPU market share exposure with them. The automotive revenues at a new record. They partner with WeRide and GM. But here's why Nvidia deserves all the hype that it has. They made 22 billion of net income just in the most recent quarter. I mean, if we zoom out, they were sometime last year, 2 years ago, making under a billion. So they have literally 22x'd the profits. I don't believe it. So they deserve all the hype that they've had, And until the net income growth goes away, Nvidia's still a buy. Nvidia's a buy and hold. Yeah, I don't really try to trade them. I just buy and hold them for the long run. So let's see. Ooh, Shane said CEG. You're right, dude. CEG reported earnings this morning. It's the only reason my portfolio's up today. They're up 10%. This is, by the way, the largest nuclear energy stock. They own 50% of all the U.S. nuclear energy facilities. I mean, they're still down on the 3-month, 12%. But, at one point, look at this. This was a bit scary. They were down 45%. Now they're only down 12. But that's... If we go to year to date, check this out. That hurt our portfolio. At one point, my portfolio was down 15% year to date, but now we're only down 0.4. We've had a very nice recovery just the past month. We're up 18% in 1 month. That's why I'm so glad I never sold anything. I actually bought the dip. That's why, buying and holding in the long run helps. Oh yeah, here's my Roth IRA, by the way. Roth IRA is a tax-free retirement account. We just have 2 little stocks in here, Kroger and Innodata. Anyway, let's go look at some more stocks here. So, Bloke said ticker symbol F. So Ford, I believe they reported earnings or something, or they are up 2.5% on the day. So unfortunately, if we go to Ford stock price, the stock is lower than it was in 1999. So you're not really going to outperform the market owning a Ford. But what you do get with Ford is a 7.5% qualified dividend. So that's the good news about Ford. It's a nice qualified dividend play. What apps do? Oh yeah, if you want to get any of these apps, they're in the link tree in my bio. First link there. This is the first link, and then also this is my other brokerage. This is Robinhood. Second link in the link tree in my bio. Another brokerage. If you want to get it, this is where I have my dividend-only portfolio. I love the simplicity of this app right here. I also have my Roth IRA with here. And what's cool about this app right here is if you look in the middle of my screen, they have a small match program. So I've deposited $2.11 and they've matched me $6, which is cool. So yeah, that if you want to get that app, second link in bio. Anyway, let's keep going here. PayPal, yo, what up? That's actually that's a Nancy Pelosi holding. You know what? Let's go look at Nancy Pelosi's portfolio right here. If we go to Nancy Pelosi's most recent purchase, or her second most recent purchase, was actually PayPal. And they had some really nice earnings. They really did. I'll show you the earnings right now. The valuation is dog cheap. They're trading at 15 times net income, which is lower than it's ever been pretty much. And the net income's growing. The net income grew 44% year over year. And that was real net income growth. So we can see their total payment volume up here. Yeah, let's see. It's 417 billion. I mean, ridiculous. They beat on, wow, they beat on, huge beat on net income. I mean, that's really crazy. So yeah, PayPal, I like that one, buy and hold. The valuation's too cheap. The risk, or I just think the risk reward looks very fair on them. Can we see your biggest loss? Yeah, I love these questions. I try to be completely transparent. Again, this is why you don't listen to me. I'm not an expert. I sell nothing. I don't got a course, book, Discord. Look at us all the time. We're down 10% in here. My biggest loss is UiPath. Actually, it's actually ChargePoint, a stock I've already sold. But anyway, yeah. Ooh, someone said, yo, Gatto, thank you so much for the 29 roses, Gatto. I really appreciate you, dude. Thank you so much, man. Would you use Robinhood? Yeah, and I do use Robinhood. Check this out. Yeah, I have my Roth IRA with them. FDIC insured brokerage. They're a publicly traded stock. I might be a little biased because I even own a little bit of Robinhood stock. I'm up like, I've taken too much profits on Robinhood, but they've been an incredible stock for me. But yeah, I do like Robinhood. Definitely a good brokerage. Anyway, let's look at let's see. Thoughts on Hims? Oh yeah, dude, Hims, they reported earnings this morning. So they had incredible earnings. I'll be quick about this one because we've already looked at them, but they're up 9% on the day. They deserve it. They probably deserve to be up more. They beat on revenue, they beat on net income, and they beat on EBITDA by a huge chunk. Look at this net income growth. You won't believe it. Net income is up 350% to a new record because last year, look, they were losing net income every quarter. Now they're making net income every quarter and they have no debt. Hims is a debt-free company, so that's what's so cool about them. They they also just partner with Ozempic, which is NVO. Oh, here we go. Grab, please. Let's check out Grab Holdings. So yeah, we were just looking at Uber a second ago. Uber is the largest shareholder of this stock right here. So if you own any Uber, you technically own a little bit of this stock right here. Yeah, look at that. 13% of the company is owned by them. They're the largest shareholder. And here's what was so genius about them. This company does exactly what Uber does, but for all these other countries. Like, notice you don't see the US or Canada or anything on here. They're in all these other countries, which is pretty cool. And they're making it ridiculous free cash flow. They're making net income every quarter now, which is a great sign. So yeah, 14% of this free cash flow goes back to Uber now if you're an Uber shareholder. Great investment by them. Let's see. Uh, do some Apple calls. Yo, Apple, um, AAPL. So yeah, Apple, this is honestly, I just like to buy and hold Apple. I don't really like to trade them or time them because you get a 0.5% dividend yield, small little yield. You get a huge exposure to smartphones. 23% smartphone market share for them. And look at that, iPhone is half their revenue. Best product they'll ever make. Then the services business, whenever you buy something in the App Store, Apple will take a 30% fee on that. Then they have the Mac, the wearables like the AirPods, the iPad. Hey, iPad sales are up 15% year over year. Let's see, and the net income's ridiculous. They make like 20 to 25 billion of net income a quarter. What's the worst thing that could happen in stocks? The stock could go to zero, right? Do you have a Discord? No. Cordy, watch out. I don't have a Discord, WhatsApp, Telegram. I don't have a book, a course. I don't got none of that. I don't sell anything. So watch out for people impersonating me. If you follow me, you might get followed by some people impersonating me. So I really appreciate y'all. Just watch out for that. I don't sell anything. I sell nothing. No course. I'll never follow you or DM you. Not a mean way. I'm up 70% on Hims. Any tips on when to sell? Hey, I would never completely sell out of them just because the fundamentals are so good. If anything, I'd maybe trim like 5 to 10% of the position, but I wouldn't sell that one. Oh yeah, thoughts on AMD. Let's go look at AMD. I'll be quick about this one because they report earnings today. I do own this company, by the way. I'm down a good chunk of money on them, 20%. But yeah, in 3 hours exactly, in exactly 3 hours, literally 3 hours and 1 minute from now, AMD is either going to be up or down a huge chunk from their earnings. And I'm going to hope they have a data center beat. Here's what I'm really watching is the data center revenue because data centers are now half their business. And if we go to look at it on a quarterly basis, it's seen some phenomenal growth. It's up 69% year over year. So that's what I love about AMD. And also, oopsie, sorry about that. And the fundamentals are so good here too. Like the client revenue is doing good. The free cash flow is $1 billion in the most recent quarter. So yeah, it was really good. Guess we'll wait on earnings though to see if unless they slowly keep on bleeding. What? Oh yeah, hey, if you want to get this app right here, it's in the link tree in my bio. It's the very first link there. I love all the analysis you can do on here. You can see the revenue breakdown. Like, oh, someone said AT&T. Yeah, this is a great dividend play. And look, this is what's so crazy about AT&T. Who knew they're at an all-time high right now? So if you've ever bought AT&T, you're definitely up on your money. And on top of the stock price appreciation, you've got a nice dividend. You get a 4% qualified dividend with this company. And look at the net income right here. They had a one-time adjustment. They actually make, look at that, pretty much $5 billion of net income a quarter. So yeah, AT&T, I like this one as a dividend play, and they had some nice stock price appreciation. I don't know if you'll outperform the market in the long run with that company, but they're doing great. Uh, let's see, CLNE. What's this one? So Clean Energy Fuels. So unfortunately, this stock is not done good. They're only worth 350 million. So think about that. The whole company is worth 350 million, which isn't great. And yeah, look at that. They lost 30 million in the most recent quarter. So they basically lost 10% of the market cap just in net income. So I'd be really careful with that one. Just because of those huge net income losses, and they're such a small company. They can't afford to be losing that right now. Still preaching TSM. Yo, I really like TSM. I almost regret I should have bought TSM over AMD because the cool thing about Taiwan Semi is you get a nice yield. You get a 1.4% dividend yield. They grow it every year. They're trading at 20 times net income. That's half the valuation of AMD. The market share is a 67%. They keep growing their 5 nanometer wafer chip market share. It's super impressive, and the bottom line is super impressive. They literally make 10 billion of after tax net income a quarter. So let's see. Yo, what up, Is Will? How's it going? Glad to catch another stream. What do you think of ARCC? Ooh, yo, this is a very impressive high yielding stock. If you're looking for a super high dividend yielding stock that actually has a sustainable dividend, in my opinion, ARCC is one of those. Look at the stock price. They've done great. And even if you buy the stock right now, you will get 9.3% of your money back every year in a dividend. And that's because this company is called a BDC, a business development company. And literally by law, they have to pay out most of the income they make in the form of a dividend. So that 9% dividend yield is normal and sustainable. So yeah, ARCC is one I really like. And oh yeah, VG Properties as well. Yo, I was just in Vegas like 2 weeks ago, and I went to all the Vici properties. I went to the Luxor, the Caesar's Palace. I went to, they own Vici properties. They own the Las Vegas. Has anyone heard of the Las Vegas Sphere? It's called like the Sphere. They own that. This is another company that has to pay out most of their income in the form of a dividend by law. They have a 5.4% dividend, which is very nice yield, and only a 66% payout ratio. They have room to raise it, and the stock's done great. So Vici Properties is a great buy and hold REIT. Probably my second favorite REIT of all time. Oh, someone said thoughts on Elf. Oh, we'll look at DG as well. We can look at Dollar General. So here's Elf Beauty. There's some good news and there's some bad news about the stock right here. They're a beauty and cosmetics stock. If we look at this right here, here's the good news. The sales are up 31% year over year. That is really impressive growth, 31% sales growth. But if we look at the net income, here's the bad news. Sales are up 31, net income is down 35. So what does that mean? They're actually losing their net margins. Margins fell 51% year over year. They only have a 4 or 5% net margin now. So we want to see the net income come back, the growth come back, or the growth is there, just the margins aren't. But it's kind of all the beauty stocks. If you look at like an Estee Lauder, this is they pretty much do the exact same thing. Look at Estee Lauder on the monthly. They're the same prices they were in 2013. And, they sell the exact same thing, the skincare, makeup, fragrance, like perfume. But anyway, let's look at DG, Dollar General. So, Dollar General, here's the thing. They have a sustainable dividend. Let's see. So if we look at the dividend, 2.5% dividend. The payout ratio is only a 50%. So they actually have room to raise their dividend. They're trading at 18 times net income, which is very fair. Consumables. Let's look at the net income though. This is the bad news. They're really losing their margins as well. The net income is actually down 50%. I mean, they're still making net income every quarter. They can still easily afford the dividend, but I don't like this net income like draws. Like look at their net margin. Their net margin is only a 1.8%. So I've been liking them all. We'll continue to add best. Hey, see you later. It's Will. Thanks for being here. Yeah, we're streaming on YouTube and TikTok right now. I'm reading both chats. I'd appreciate if y'all would subscribe to my YouTube channel. It's called Nathan Robert, Linktree in bio. I don't sell anything, by the way. No course, Discord, WhatsApp, Telegram. I don't got none of that. Oh, what up, Lillian? She said, can we look at UPS? So yeah, UPS, they are a nice high yielding dividend play, but I'd be kind of careful with this one because look right here. They have a 6.9% qualified dividend. Very nice yield, but the payout ratio is starting to get a little high, a 96% payout ratio. But let me go look at their most recent earnings report. Let me go analyze it because they just reported earnings. Let's see. So they beat on revenue, they beat on net income, and they beat on EBITDA. So they actually beat like by a couple percent. So this is good news. The net income is up 6% year over year. They make like 1 to 1.5 billion of net income a quarter. But I think the dividend costs like 1.5 billion as well. So I mean, I can check for you. So here, I'll be super quick about this because probably no one cares. But this is how I check if a dividend. Here's how you check if the dividend is actually sustainable. So look, they make 1 to 1.5 billion of net income a quarter. Let's go see. The dividend cost 1.35 billion. So you know what? It's actually sustainable for right now. So the dividend cost 1.35 billion. Still, they don't have too much left over. Actually, they couldn't afford the dividend in the most recent quarter with the net income, if you notice. So yeah, that's what I'd be a little careful of. They might have to cut it if things get bad. Anyway, hopefully that was helpful. What platform do you? Yeah, if you want to get this platform, it's in the link tree in bio. First link there. Ooh, here we go. This is Spotify right here. Spotify stock. Congrats if you own them. They're at an all-time high. I should have been buying the stock every month instead of paying for their subscription. Jeez. And check this out right here. Their premium subscribers just keep on growing. I mean, like here, the premium is 90% of the business. And look at the annual growth here. I mean, this is why Spotify has been growing so much. They have some really impressive high margin growth. Ad supported, it's growing as well. Yeah, look at the free cash flow. Wow. They're making like basically 2 billion of free cash flow a year. Wow, they're making net income every quarter. So this is really impressive on Spotify. The valuation is still too high for me to realistically buy them right here, but great fundamentals, growing fun. Yo, Sermon, what's up, dude? How's it going? If you had one to recommend one stock, what would it be? Probably Google. I love Google, man. Great buy and hold forever company. Again, nothing in this is financial advice. Here's my main dividend portfolio where I do own some Google. So yeah, I do own 18 shares of Google. We're only up 1% on them, but I think that's a great buy and hold for the long run. Constellation Energy is the only reason our portfolio is green. That's the only stock green in here, basically. United Health keeps on getting wrecked. This is another healthcare stock that I like. They are down 22% year to date. If anyone's heard of United Health before, they have like a 2% dividend, huge health insurance company. Yo, what up, Rory Shop? How's it going, man? Rocket Company? Oh, yeah, RKLB you're talking about. So, yeah, this is the company that sends a lot of rockets into space. This is the best space stock, in my opinion. They have a backlog of 1.5 billion of orders that they can't fulfill. And look at this, their space systems business. This is why I actually like this one and I could get behind them. It's seen some phenomenal growth. Like, this is the kind of growth I want to see in my company. So, that space systems revenue growth is the main reason I like them, plus their huge backlog. So use yeah, Brandon. I use Robinhood and some other. I use this app as well. Let's see. Thoughts on CRWD? Yo, that's CrowdStrike. You know what? Let me go back to Nancy Pelosi's portfolio. So if you go to Nancy Pelosi's portfolio, she actually bought into CrowdStrike. That's 4% of her portfolio. This is a huge cybersecurity stock. Wow. The stock is at an pretty much all-time high right now, so congrats if you own them. They kind of deserve it too. If we go to the revenue right here, on an annual basis, I mean, this is some impressive revenue growth. So, yeah, they deserve all the hype. They're still not, they had a lawsuit where they made all the airlines go down and stuff. That's a one-time thing, so don't really worry about the negative net income. The valuation looks stupid high on CrowdStrike, but it's not too expensive, but I still wouldn't really buy them right now at all-time highs. Yeah, hey, Shiraz, if you want to get this app, it's in the link tree in bio. First link there. It's actually a brokerage. It's called Moomoo. Andrea said GIS, General Mills. So General Mills owns like Cinnamon Toast Crunch. Dang, they have not been doing too good right now. I think RFK doesn't like the super sugary stuff, but look at them. This is a great dividend play. You get a 4.4% dividend and only a 55% payout ratio. And look at where all the revenue comes from. This is what I like to see, a very diversified, income streams. Snacks, cereal, again, Cinnamon Toast Crunch, convenient meals, pet. They're in the pet industry. They sell dough. Oh yeah, they own Pillsbury dough. They own yogurt. So yeah, pretty cool. If you go to the net income right here, yeah, look at that. They're making like 600-700 million of net income every quarter. So yeah, General Mills looks like a nice buy and hold. I think they're kind of just following with like Pepsi. If we look at like a Pepsi, for example, their stock kind of looks pretty similar to a General Mills. So let's see here. Please check GPUS. The ticker symbol is GPU. So hey, this is hyperscale data. So yeah, look in the top right. Please don't buy this stock, in my opinion. If you look in the top right, the whole company is worth 33 million. So they're at an all-time low. The whole company's worth 33 million, and let's see how much they're losing. So they lost 5 million. Yeah. In the sales, they lost the growth of the sales as well. This is awful. Sales are down 30% year over year. They lose net income every quarter. They have the same liabilities as assets when they used to have more assets and liabilities. So this is trending in all the wrong directions. I would not want to buy that one. I'd be careful. Yeah, Jack 108. Nothing's really blowing me away there. Ooh, here's a cool one. Ticker symbol PINS. This is Pinterest. Has anyone heard of Pinterest before? Like the social media app, kind of. A lot of moms use it. $18 billion company. They have no debt. Completely debt-free company. Oh, wow. Let's check out their active users. 553 monthly active users. That's up 3% for the previous year. Not bad. And if we go to the net income right here, they usually make all their net income in one quarter every year. They didn't actually, they're not trading at 10 times net income. They're actually trading at like 30 times net income. But they have a great balance sheet. Let's see how much cash they have. They have 2.5 billion of cash. So they're about 13% of their market cap is just their cash on hand, which is pretty impressive. Yeah, they're in my debt-free watch list. Here's actually my watch list of all debt-free companies like Celsius, Zoom, Opera, DocuSign, Yelp, Duolingo. Duolingo's done great. I got 5 shares of CrowdStrike during the lawsuit. Yo, you must be up a good chunk on them. Congrats. How do you know which ones to buy? Or I'm not sure what you mean there. I buy companies that I just believe in that have good fundamentals. So let's see here. BP is pretty low. Is that the oil stock BP? Yeah. So some of these oil stocks, yeah, this is I like them for the higher dividend yields. Like check this out. BP has a 6.58% dividend yield. So, you get exposure to oil. Unfortunately, these oil stocks just don't outperform in the long run. Like this stock is the same price it was in 2008. So think about that. So yeah. Let's see here. What are your thoughts on Kraft Heinz? Oh, yeah, what up, Skagnet? How's it going, man? So yeah, Kraft Heinz, that's a Buffett stock. If you go to Warren Buffett's portfolio, we were just looking at oil stocks. He owns Chevron, Coca-Cola, but he also owns Kraft Heinz. It's 3.39% of his portfolio. Unfortunately, this stock has not done good. This company used to be owned by Mo Altria Group. I can't say what they do, but they used to be owned by them, and then the banks just destroyed this company with their high payout ratios, wanting yield from this stock. Anyway, here's Kraft Heinz. They own Lunchables, they own ketchup, they own a lot of stuff. If you go to the net income right here, it's a little choppy. This is the bad news. Like sometimes it's negative, which isn't great. But if we go to the dividend right here, you get a 5.6% dividend. The payout ratio is a 70%, so they actually have room to raise their dividend. Um, but they're probably just reinvesting in the business, doing buybacks right now. You probably won't outperform the market owning like a Kraft Heinz in the long run. Would you consider yourself a long-term investor? Yeah, a lot of these stocks I've bought, I just buy and hold for the long run. I've held Powell Industries for well over a year. I bought this one so long ago. Like a lot of these stocks, like a DocuSign, I haven't taken a single profit on DocuSign, or Powell Industries. So let's see here. Um, Palantir or PLTE? Yeah, Palantir is down 13% today. Palantir reported earnings. They triple beat. That was the crazy news. They triple beat on earnings and the stock fell. Probably just because they're so ridiculously overvalued. They're trading at 81 times sales. So they're trading at 81 times the revenue, not their after-tax profit, the 80 times revenue. So yeah, they did triple beat on earnings. They have no debt as well. That's what's so crazy. Palantir is a debt-free company. A lot of the revenue comes from the government, 55%. I mean, this is why everyone loves Palantir. The fundamentals are really growing incredibly. The government contract revenue is up 41% year over year. Very impressive. So, yeah, what up, Samuel? He said VOO. Yeah, I love the S&P 500. This is an ETF you just buy and hold. You should just get like 8% of your money back every year with the S&P 500. It diversifies your money for you into Apple, Microsoft, Amazon, Meta, Google, Broadcom, all the top companies by market cap. So yeah, Gladstone Investment. Yo, what's that one? Let me type it in. Or is it Gladstone? Or is it Gladstone of GAIN, I think you're talking about. Well, wow, look at this stock. They're doing great. They're at an all-time high. I believe, yeah, this is a BDC right here, a business development company. They actually have to pay out most of the income they make in the form of a dividend by law. So that's why they have the 7% dividend yield. It's not unsustainable because they're a BDC. So yeah, that's what's kind of cool about them. You won't really outperform the market probably in the long run with this stock, but you do get they have a monthly dividend. So yeah. Visa or MasterCard? You know what? Let me look at MasterCard. Ticker symbol MA. So wow, MasterCard's done great. Visa. The answer is like both. They have a shared monopoly or they have a duopoly on their credit card payment processors. Every time, those small micro transaction fees that are slowly bankrupting us are making them rich. And if we look at the net income, it's ridiculous. They make like 3 billion of net income plus a quarter. So very consistent there. They're a great dividend growth company. Yo, what up? Jay said UNH. Yo, that's one of my bigger losers that I've recently bought. If we go down here, dang, they're down another 2% on the day. No way. So yeah, we own 4.12 shares of UNH. They're trading at a stupid low valuation now, like 15 times their own full year earnings. So yeah, 16 PE currently. We actually use their OptumRx. We're a customer. Look at their OptumRx business. This has seen some phenomenal growth, up 15% year over year. But they're a nice dividend play. One of the main dogs of the Dow. They have a 2% dividend yield. So I like United Health. Oh, and let's look at Eli Lilly as well. Oh yeah, hey, if you want to get this app, Blessed, it's in the link tree in bio. First link there. It's actually a broker. But here's Eli Lilly right here. Here's why I love this company. They deserve the high valuation. They sell a bunch of prescriptions, as you probably know. Like, look at all these ones right here. Like, look at like Mounjaro, for example. The revenue's up 112% year over year. Look at Zepbound. This is what's crazy. A year ago, the sales were nothing, 100 million. Now it's 2.3 billion. This is their new weight loss prescription that rivals Ozempic. So I really like Eli Lilly. Insane growth company. They have a lot of prescriptions like that. Honestly, I'd rather buy Eli Lilly than NVO right now than Novo Nordisk, just because I know Eli Lilly will probably do better in the long run. So let's see. Didn't get any thumbs up on Xerox, but bought it. Oh, Xerox Corp. Yeah, they sell printers and stuff. Yeah, look at Xerox. Yo, yeah, dead company for decades since 1990. Wow, this stock is lower than it was in 1999. So they're kind of like an unsustainable dividend play right now. Like, look, they have a 16% dividend yield, and the payout ratio is negative, so they cannot afford the dividend. So anyway, OBDC, yeah, here's another of one of those high yielding dividend stocks that have to pay out their income in the form of a dividend by law. So $7 billion company trading at 10 or 9 times net income, and they have a 12.5% dividend yield. So, and it's actually sustainable. So yeah, OBDC's done pretty good. They're one of the better. There are not many BDCs that I like, but ARCC, Main Street Capital, OBDC, I really like those. So yeah. Taiwan Semiconductor. Yeah, we'll look at Taiwan. I'll be quick about this one real quick. I like this one. I should have bought them over AMD. They have a dividend, a 1.4% dividend yield. And if we go to the net income, they make 10 billion of net income a quarter. Very impressive. And their market share, it keeps on growing. They have a 67% foundry wafer market share. So incredible. ADMA. What a let's see. ADMA. Wow, the stock's at an all-time high pretty much. Congrats if you own this company. Jeez, $5.5 billion company now. Let's see how their business is doing. So revenue's up 59%, and look at this net income growth. Yeah, last year they were losing net income every quarter, but now they're a profitable company. Yeah, they're making a bunch of net income now. So this is actually a really good sign for them. I can see why they're at all-time highs. The profits are also at an all-time highs. Usually the fundamentals kind of follow. Can you look at BULL? So yeah, this is Weeble. They recently IPO'd. Look at this absolute pump and dump. The stock rallied, when they IPO'd at $75. Now they're back down to 14. So yeah, they're a $6 billion company. They're not that huge. That's actually this app right here. This brokerage. Yeah, there's my AMD position. So hey, I'm kind of a customer as well. Yeah. Anyway, I need to look at their fundamentals more. So let's see here. What up, Brandon said Nvidia stocks. So let's look at Nvidia right here. I haven't looked at them in a while. AMD reports earnings today, so AMD might move Nvidia, which will be interesting to see. But look at this right here. Here's what's so impressive. Look at their PC GPU market share. Did you know Nvidia has an 18% GPU market share? They keep on growing their automotive business. But here's why Nvidia deserves all the hype. Look at this sales growth. It's up 101% year. Like, forget the name Nvidia. Like, remove Nvidia at the top. Like, if this was any other business, this company deserves to be at all-time highs. And also, the net income is at an all-time highs. 22 billion of net income just in the most recent quarter, up 80%. Like, they used to make under $1 billion. So they've literally 22x'd their bottom line. So they deserve all the hype. I think Nvidia is a great just buy and hold for the long run. No reason to really sell them or trade them probably. Or maybe trim. Let's see. Can you look at ET? Oh yeah, this is Energy Transfer right here. This is an MLP, a Master Limited Partnership. So here's the thing with an MLP. If you buy this stock, you get a K1 tax form at the end of the year, and the K1 tax forms are notoriously hard to fill out. It costed me $300 with an accountant, so I wouldn't buy this one unless you put in a lot of money into this one and you're okay with a tax form. But it's one of the very, very few stocks that give a K1 tax form. Because they're an MLP, a Master Limited Partnership, they have an 8% dividend yield. That's why a lot of people like them, though. Because they're an MLP, they have this 8% dividend yield, and the stock's done pretty decent since 2019. So, yeah, I'm just staying away from them because of the K1 tax form. Let's see, Lyft. Yeah, let's look at Lyft, man. This is like an Uber competitor right here. Unfortunately, Lyft has not done too good. Lyft is kind of at like a multi-year low. But here's the weird thing. The stock's at a multi-year low, but the fundamentals are at an all-time high. Check this out. Revenue's up 26% to a new record quarter. They beat like crazy on all three. They beat on revenue, beat on EPS, which is net income. They beat on EBITDA. Yeah, look at this net income right here. Look at this. They used to lose net income every quarter and like a lot of money, 400 or 500 million a quarter. Now Lyft is actually making net income, or they did in the most recent quarter. So they just need to keep that up. So that's probably why the stock hasn't done too good. They haven't stayed consistently profitable. Yo, Musty said Google stock. I actually haven't looked at Google a single time today, or at their fundamentals. Here's what I love about Google, by the way. This is probably one of my first or second favorite, just buy and hold forever company. No reason to sell this one. That I definitely wouldn't sell this one right now. They're trading at 18 times net income. Very fair valuation. Morningstar has it at a 5-star, 237. Analysts have this at 198. We can see like the individual analyst right here. Who is giving these recommendations? Andrew, Ivan, anyway. These are all on the April 25th. All right, anyway, let me show you the actual real numbers here because this is what matters. Here's the great news. Revenue was up 12% and net income was up 40% to 35 billion of net income just in one quarter. That means Google is growing their net margins. 30% growth of their net margins is ridiculous. You know, they own YouTube, Android, they own Waymo, they have the Google Cloud. Like, look at just this Google Cloud business. I mean, incredible growth. There's like so many mini businesses inside one. They have their own quantum chip, Waymo, so it's like an ETF, and that's why they're a $2 trillion company. So yeah, I think they're a nice buy and hold forever kind of company. The companies that give dividends usually good companies, but for a company to pay a dividend, they have to be profitable. That's why I like to sometimes just select out or just only buy dividend stocks. Like actually, if I go back to, I own a lot of non-dividend paying stocks, by the way, but every stock in here pays a dividend. Most of them are very small, like Google. Google pays a dividend, but it's very small. Meta, Constellation Energy, very small dividends, but let's see here. Yo, Robert said Apple stock. Yeah, let's look at Apple right here. You know, I really like this one as another just buy and hold, another Mag 7 stock. I'll be quick about this one, but their smartphone market share is a 23% smartphone market share. Very impressive. You know, 50% of the revenue comes from the iPhone, then the services. Like whenever you buy something in the App Store, Apple takes a 30% high margin fee on that. It brings so much to their bottom line. Here's why Apple's so affected by tariffs, by the way. Look at this. Did you know only 36% of Apple's revenue comes from the U.S.? I thought it'd be like 50% or something, but no, only 36% comes from the U.S. And they make stupid money, like 25 billion of net income a quarter. They do crazy stock buybacks as well. So yeah, Apple, very nice one. What do you think about Ford? You know what, Robert? He said, what do you think about Ford? So yeah, Ford, this one, I'll give you the truth. You won't, in my opinion, you won't outperform the market in the long run with this company. Like they're unfortunately lower stock price than they were in 1999. But what you do get with Ford is this sustainable qualified dividend. They have a 7.5% qualified dividend, and the payout ratio is only at 50%. So that's what's so good about them. And it's like that because they traded a stupid low valuation, 8 times net income, but they also just sell a commodity. And there's a lot of troubles. We don't know the long-term growth for them, so they kind of should trade at that low multiple. But that's also why the yield is so high. So hopefully that was helpful. They're a nice qualified dividend play. So yo, here's Enbridge. This is a Canadian utility. If anyone's heard of Enbridge before, the stock's done great. Look at that, all-time high on Enbridge pretty much. And then not only is the stock at an all-time high, but you've also collected a 5.5% dividend. You know, that's super impressive. So 27 PE, yeah, liquid pipelines, gas distribution. So yeah, they're a Canadian utility infrastructure play. So yeah. Can you take a look at SHW? Yeah, what up, Doberman? He said, Sherwin Williams. Yo, my phone's getting low here. Sorry, dang. My phone's on 10%. I gotta hustle here. Hey, yeah, by the way, if y'all want to hit the follow button, we go live every day, twice a day. I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. I'm just on here giving my opinion. The only thing I do have is a YouTube channel. So if you want to help me out, subscribe to my YouTube channel. It's called Nathan Roberts, and the link tree in my bio. But anyway, here's Sherwin Williams. This is a nice dividend growth company. You get a 0.8% dividend yield. They grow their dividend every year because they can easily afford to do it. Yeah, so they kind of sell paint. You've probably heard of Sherwin Williams Paint, like Paint Stores Group, consumer brands. Let's see, how's the net income doing? So yeah, wow, they make over 2 billion of net income a year, easy. That's really impressive. They made like 2.6 billion. So yeah, they're oh, TikTok. Okay, we're back. Sorry, TikTok made me prove I'm not AFK. Okay. So yeah, hopefully that was helpful. I like them as a dividend growth company. So let's see. Please check Tesco stock. Yo, what's Tesco? Give me the ticker symbol. I'll check it out. Yo, what up, Omar? He said RKT. So this is Rocket Mortgage. Yeah, dude. So they just paid a special dividend. They just made a lot of money. Let's see, how much was the special dividend? It was 80 cents. You basically got, wow, 5% of your money back instantly in a qualified dividend if you owned it before the dividend. So yeah, they just do loans. I mean, yeah, more mortgage loans like that. So the numbers are a little choppy here, but this is one of the better run mortgage companies. The stock hasn't done too good though. This company heavily relies on interest rates going lower for people to refinance the loans. They originate the loans as well. KIDZ for the long run. Yo, I don't know about this company right here. I would definitely probably stay away from this one. If you look in the top right, this is like the newest meme stock people like. If you look in the top right, they're only worth 150 million. That's a very small company. The whole company's worth 150 million, and they have no revenue. Let's see, revenue is 900,000. They don't lose too much money. They lose 100,000. The balance sheet looks weird, really weird. Yeah, nothing. Nothing's blowing me away there. I probably would stay away from them. Thoughts on FedEx? What's the? Is it FED? Um, let me just type out the whole name. It's FDX right here. So here's FedEx stock. So yeah, um, FedEx, they're kind of like UPS. Let's see, how's the dividend? So you get a 2.5% dividend. The pay ratio is only at 30%. That's actually very nice. Low valuation, 13 times PE. Package statistics. Average revenue per parcel is $24 on average. That's cool. Yeah, look at the net income. They make, like, basically, if you average out the 4 quarters, they actually make $1 billion of net income every quarter. So they're still definitely profitable. I wonder why the stock has done so bad recently. Maybe it's just following UPS. Maybe they lowered guidance. Maybe it's the tariffs. Who knows? Maybe with the tariffs. Let's see. TESCO is a UK grocery store. Uh, is it? I don't know if I can find that stock. Let me know the ticker symbol and I'll check it out for you. Yo, what up? Rave Seek said SE stock. What's this one? Um, this is C. Oh, I know this company. This company has some crazy good growth. Y'all won't believe it. So check this out right here. We can see their active users. They have 618 quarterly active users. They're an e-commerce site. So let's see. Yeah, literally in 2018, revenue was 270 million. Now it's 12.5 billion. Incredible growth. And they made net income now. They're finally making net income, 230 million in the most recent quarter. What about free cash flow? Yeah, incredible free cash flow. Wow. So I see why I see, the company called C. I see why they're doing so good. Yo, my brother actually owns this stock. This is Ontario Midstream. The stock's done great. This is another like natural gas pipeline stock. I don't think they give you a K1 tax form, but yeah, this one's a nice dividend play. You get a 5% dividend yield. And water. Oh yeah, they have this niche water handling business, which is interesting. So yeah, they're an all right one. You won't outperform the market probably with that stock. So what does it mean when a company lowers guidance? Like, yeah, so if a company originally like we're gonna make $10 of EPS, they might have to lower it to, we might only make $9 of EPS, which is just the net income. Please do a decent review on Pony. What's up, Rezu? Uh, Rezitsu. I'm probably saying your name wrong. Ronan, what's up, man? Let's check out PONY. So this, I got you. This is Pony AI. So, yeah, hey Kenneth, the only stocks that qualify for a K1 or give you a K1 are the MLPs, the master limited partnerships. They're only oil and gas pipeline companies. And it'll say on their investor relations like energy transfers, with very rare company that pays a K1. Usually it'll say LP in the name or MLP in its name. Wow, look at anyway, let's get back to Pony AI. But I get what you mean. I accidentally bought an MLP and it gave me a K1 tax form. I had to pay $300 with an accountant to get that filled out because it's so freaking complicated. What app are you using? Oh, hey, if you want to get this app, it's in the link tree in bio. First link there. What's your referral? Yo, you're so nice, Factual. I don't think I have one, but I I actually I you actually I don't know. Actually, you'll have to screenshot this. Yeah, I guess it. Um, let's see here. This is my. If you wanted to help me out, screenshot this right here. That's my actual like code. If you do get the app, you screenshot that for me if you really want to help me out, Factual. But let's get back. Sorry, I don't mean to sell. I don't sell anything, by the way. I don't have a course book, Discord, WhatsApp, Telegram. Sorry. But let's see. Um, What stock were we looking at there? I forget. Oh yeah, Pony. Yeah, I forgot. My fault. Let's go back to Pony. They were up 41% today. Wow, that's some incredible growth. There must have been some good news on this day because ever since the stock has been straight up. And unfortunately, I don't know what that news is. So let's see. Virtual driver operations. Well, look at the growth here. From 2021, it was 8 million. Now it's 39 million. It's up 64% from the previous year. Engineering solutions, that's down a little. But yeah, the thing is, this company just IPO'd. So look, if I unfortunately click on the revenue, there's only 1/4 of data because they just IPO'd. So I wish I could give you more thoughts on that company, but yeah, I apologize there. Yum Brands. Oh yeah, no problem. Ronan, Yum Brands. This company owns Taco Bell, KFC. Oh, someone said Uber has a deal with Pony. Oh, that's actually very interesting. I did not know that. Thanks for that, Catherine. So here's Yum Brands. This is Taco Bell stock, and they've done incredible, kind of like McDonald's. So look at this. They own KFC. Yeah, not just Taco Bell. They own KFC, Taco Bell, Pizza Hut, and Burger. Haven't heard of them before, but KFC and Taco Bell are huge. Look at the net income. It did fall in the most recent quarter. It was like a one-time adjustment actually, but yeah, they make like 400 million a quarter, and this is a nice dividend play, 1.84% dividend yield. So oh yeah, hey Eric, if you want to get this app, it's in the link tree in bio. First link there. It's actually a brokerage. It's called Moomoo. So yeah, if you had to pick four of them, I wouldn't pick Tesla, Apple, and Microsoft. And I own and I own all the other four, so that's why I picked those. So I actually do own, and it's not that I don't like Apple and Microsoft. I love Apple and Microsoft. I'd happily own them, but those are the ones I own. I own Google right here. I own Meta, and I own Amazon right here. You can kind of see where I buy a stock too. I've been dollar cost averaging into Amazon recently. Valuation was looking good there. By the way, don't listen to me. I'm not an expert. Look at this stock right here. Make sure you're diversified. Uh, oh, Charles Schwab. Oh, is that SCHD? Or that's the, or is SCHW is Charles Schwab. So yeah, Charles Schwab, this is the company that owns SCHD. They collect those high margin fees whenever you invest in the ETF. So like an asset manager. Let's see, active clients. So yeah, they manage client assets. Yeah, asset manager. The client assets are at 10.10 trillion. So they have tons of assets under management. Let's see, how are their investor services doing? So it just jumped up 20% year over year. That's actually some nice growth. 20% growth. Advisory, it's up 14%. Not bad as well. So if we go to the net income right here, wow, they're making billions every quarter. Oh wait, that's yeah. So they make like 1.25 billion of net income a quarter. Not bad. It's actually quite nice. Hey, yes sir, Sermon. Let's see, PLTE dividend thoughts. Oh yeah, this is the covered call ETF. So what this does is it just sells calls on Palantir. There's only 50 million assets under management. If you just sell calls on Palantir yourself, you'll make 10% of your money a month, but you're most likely your calls will get shared away. So yeah, that's an asset you would want to sell calls on to collect the high premium. But again, you're not going to outperform the market. The Palantir is such a high growth stock that statistically someone already ran the math on that. I promise you, on a total return basis, that probably won't outperform the S&P 500. But anyway, again, I'm not trying to bag on anyone's stock here. Not financial advice, of course. I don't benefit or I don't sell anything here. PLL, what's this stock right here? So, oh, this is a lithium stocks. Or is that the stock you're talking about? Piedmont Lithium. So yeah, unfortunately, this stock has done so bad because the price of lithium has done so bad. If you go and look at the price of lithium, it looks pretty similar to this right here. You mainly buy these stocks for the balance sheet. And look at the balance sheet right here. Lots of cash and no debt at all. So yeah, fortunately, they just rely on whatever the commodity price is doing. Yo, KC, what's up, dude? Good to see you, homie. He said KTTA. Sorry, I didn't get to this stock. Sorry if I don't get to anyone's stock here. I try to get to all of them. I do apologize. But yo, dude, this company looks very, very risky. I'd probably not buy this one. If you look in the top right, the market cap is 5 million. So this whole company is worth $5 million. They are up 17% on the day. Maybe there's some good news around them, but the whole company's worth 5 million, and they lost 3 million in the most recent quarter, which is literally 60% of the company. Yikes. So yeah, nothing's really blowing me away there. I heard SUNN for AI in the future. Let's see, what is SUNN? Are you talking about Solar Bank Corp? Um, I don't think you're talking about this stock. It's a Canadian company. I don't know. Um, Can you, let's see, ASO? Oh, here we go. Academy Outdoor. What's up, What15? How's it going, dude? So this is Academy Outdoor Sports. They just sell commodities. They're like a Dick's Sporting Goods. They just sell like outdoor stuff, apparel, sports, footwear, shoes, and but this is a nice dividend play, low valuation. You get a 1.1% dividend yield, and the payout ratio is a 7%. Which is funny about this is they have doubled the dividend yield of Apple and half the payout ratio, and that's because they trade at literally they trade at zero point 0.4 times sales. So the whole market cap is zero point 0.4 of the entire sales, and the net income multiple is a 6.5. They trade at 6.5 times net income. So basically, you'll make your money back in 6.5 years. But I guess the net income isn't growing. Net income did fall 20% year over year, but they're still making net income every quarter. They can't afford the dividend. So that's the good news. Oh, what up, Luffy? He said NDAQ. So this is the NASDAQ stock right here. They're actually a publicly traded stock, like the actual stock exchange. So let's see right here. They do market services, capital access platforms, which is IPOs basically. How's that doing? Wow, it's up 7.5% year over year. Let's check out the bottom line. So yeah, they're actually making a lot of net income every quarter. 400 million of net income every quarter. What about dividend? 1.2% dividend yield on them. So hey, that's actually very interesting. Oh, Bank of America. Would I buy Pony? Probably not right now. But if we go to Warren Buffett's portfolio right here, one of his major holdings is Bank of America. 10% of his portfolio is in Bank of America. And yo, What15? Thanks so much for the gift there. I really appreciate that. Yeah, Bank of America, classic bank. You get a nice dividend growth here. You get a 2.5% yield, and the payout ratio is only at 31%. So they have a lot of room to raise the dividend. And look at the net income right here. They're making $7 billion of after-tax profit a quarter, basically. So yeah, they're not going anywhere. Buffett owns a lot of them, so it's Buffett backed, which is cool. Progressive Insurance. Yeah, Progressive Insurance has been crushing it, dude. Look at this stock right here. It's moved like Nvidia. The stock is literally at an all-time high right now, which is very impressive. And if we go, yeah, personal lines, look at this right here. Here's why the stock's grown so much is because the business has. The revenue's up 23% year over year, but not just the revenue, the net income. They made 2.5 billion, up 10%. They make 3 billion or basically 2.5 billion a quarter, and they just paid a special dividend, which is insane. They're making so much money. They're like, oh, we'll pay a special dividend. Ooh, this is a very niche company right here. This is TKO. Yo, what up, user FE? He said TKO. Now, this is the company that owns the WWE, they own UFC. The TKO is their ticker symbol. And yeah, look at it. It's like a perfect 50-50 split. The UFC is half their business and WWE other half. So they get a lot of license royalty fees and stuff like that. Cool company. They're niche. Uh, Duolingo. Yeah, dude. DUOL, I believe. So yeah, Duolingo, incredible company. No debt, completely debt-free company. Stocks at an all-time high because of this incredible subscription revenue growth. This is what I love to see. The subscription revenue is up 45% year over year, literally to a new record. So that's what I like to look for in a company. It's all reoccurring. Advertising revenue, look at that. Advertising's up 38%. Very good numbers. The free cash flow is 100 million. Net income was up 30%. No debt. So Duolingo deserves the all-time high. Yo, my phone is getting low here. Yo, if y'all want to hit the follow button, we go live every day, twice a day. We'll be live later tonight. Do you teach this stuff? Yo, Mark, no, I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. Please watch out for people impersonating me. If you follow me, I really appreciate that. You might have some person impersonating me trying to follow you. So watch out for that. Safe to hold Dave through earnings. Yo, Ethan, I own some Dave right here. And yeah, I honestly, they've done super good since 1 year ago. This was a $5 stock. Now it's $100. But here's why they deserve to be over $100 a share easy. It's this free cash flow per share growth. They made $3 in the most recent quarter, and the whole company in the share price is $106. So they made 3% of the company just in the most recent quarter free cash flow. Anyway, I just actually made a YouTube video about that stock. If you want to check it out, go watch my most recent YouTube video. My YouTube channel is in the link tree in bio. It's called Nathan Robert. The YouTube video is called 5 stocks that could easily double. I go over 5 stocks that I actually believe have a realistic chance of doubling. So if you want to check that out, I think Dave has a realistic chance. Again, not financial advice here. Look, actually, every stock in here is down on the day. How about our Robinhood portfolio? Looks like the market's trending down right now. Not great. Let me check the SPY right here. So yeah, look at that. S&P 500 is kind of going down. Not great. But yeah, what's up, DG? Yo, DG, if you got a stock you want me to look at, let me know. I want to check it out for you. Agnico Eagle. What's the ticker symbol for that one, John? I'll check that one out. I'm not sure what that one is. Um, would you buy it? I forget what we were looking at, Brandon. I apologize there. Oh, someone said SoundHound AI. So let's look at this company right here. There's some good news, but there's also some really bad news about this stock right here. And I just like showing you the numbers for yourself. Look at their subscription revenue right here. This is the great news. You know, literally a year ago, they had no sales, like 500,000. Now it's 30 million. That's incredible growth. You know, at this growth rate, what's it going to be this time next year for their subscription revenue? But if you go to their product royalties, their high margin royalties is actually down 73% year over year. Not too sure what's happened there. And if we go to the net income, not sure how they did this, but they lost 250 million of net income in the most recent quarter. So those net income losses really scare me, but that subscription revenue growth was really good. Really good. Oh yeah, Duolingo. I don't know if I'd buy Duolingo right now, but I would definitely like to own that one. They're a great buy and hold. Oh yeah, MSTY. You know what? Let me go over here. MSTY. This is a covered call ETF. So check this out. MSTY. This is they sell covered calls on MicroStrategy, which is an asset you want to sell calls on because of the high premium. So it's a bit unsustainable, and you will not outperform the market in the long run, in my opinion, because they have a 1% expense ratio. So they take 1% of your entire investment away every year. And here's the crazy part: they're saying that you get 125% of your money back a year in a dividend, which isn't doesn't sound too. It sounds too good to be true. But you basically buy that ETF to max out your dividend income. But yo, I appreciate y'all being here. Mm. Sorry, if y'all want to hit the follow button, we go live every day, twice a day. We're going to be live in a couple hours because AMD reports earnings. We got to review AMD. And also, a company you've probably never heard of that I own is ticker symbol POWL, Powell Industries. They report earnings today, and they're either going to go up or down 15% according to the options market. So, without it, would you buy some? Yo, I would, DG, I'd buy MicroStrategy to maximize my dividend income, and I would not have a lot of my portfolio in that stock. Maybe like 3%, nothing more than that. Oh yeah, here's Agnico Eagle. So wow, the stock's at an all-time high. They're a Canadian company, 1.35% dividend yield. Let's see. Yeah, see you later, Sermon. They own Detour Lake. Oh, I think they own a bunch of gold mines. So these are all gold mines. And the price of gold is at an all-time high. Wow, 800 million of net income. I'm going to add them to my watch list. That's very impressive. But anyway, hope you guys have a great rest of your day. We'll be live in a couple hours. If you want to download this app right here that I'm on, it's my favorite app for analysis. You can track like Nancy Pelosi's portfolio and stuff. It's in the link tree in my bio. It's the very first link there. It's where I like to park my idle cash as well because you get the nice interest if you look in the middle of my screen. But anyway, see you guys later. Hope you have a great rest of your day. We'll be live very, very soon. See you later. Thanks for being here. And yeah, thanks for y'all on the YouTube.